This is the Nedgroup Investments podcast, where we explore a variety of views and insights that investors care about. Hello, I'm Tumisho Grater from Nedgroup Investments Multi-Management. This installment of your market and economic wrap is titled Powell's dovish testimony sparks the Rand rally. Last week witnessed significant activity in monetary policy circles. This included US Fed Chair Jerome Powell's testimony to Congress, where he signals that interest rate cuts are coming soon. He said the Fed was close to being ready to lower rates as the current level was too high for the mild inflation and moderate growth environment. He also confirmed that rates were above the neutral level that would neither stimulate nor slow the economy. It is worth noting that Powell's speech echoed the January meeting's message, which was also interpreted as dovish. The data has improved a lot since the January speech, yet he still didn't change his tone. This is very different from last year when he was more hawkish at the same testimony. This dovish signal had a broad impact on emerging market assets as the US dollar softened against other major units and most emerging market currencies as expectations of a Fed cut in June rose. It appears that all roads lead to June for both the US and Europe, as the European Central Bank President, Christine Lagarde, suggested that the ECB could also cut rates in June. In China, the annual policy meeting of the country's parliament, the National People's Congress, set the growth target for 2024 around 5%. This indicates that the government will rely on more economic stimulus to boost the economy. The target is higher than the previous year's 4.5%, reflecting the recovery from the pandemic and the trade tensions with the US. Locally, focus was on how the economy managed to steer clear of a recession in the fourth quarter of last year. The economic growth rate in 2023 was only 0.6%. This is much lower than 1.9% in 2022. The outlook for 2024 is slightly better, but market expectations are that the economy will not recover until the second half of this year. Challenges such as power cuts, transport problems, low global demand, low commodity prices, and high interest rates are likely to weigh on growth prospects in the first half of this year. The situation should improve in the second half as inflation slows down, central banks lower interest rates, and China's stimulus measures have a more impact on the global economy. Against this backdrop, the local unit made notable gains last week on the back of South Africa avoiding a technical recession, while Powell's statement also boosted the Rand. This saw the currency strengthening beyond the 19 Rand mark against the US dollar, this for the first time since late February, closing at 18 Rand 68 last week Thursday. In equity markets, the JSE FTSE All Share Index traded lower in the week. Industrials recorded the most significant loss, down 2.5%, while basic metals gained by 5.3%. US equities once again led the gains amongst the industrialized bourses. The S&P 500 set a new intraday record high on Wednesday, boosted by the US Fed Chair's dovish tone, which also boosted earnings expectations. The Nasdaq was lifted by solid gains among chip makers, with the semiconductor sub-index leading the rally. European equities also gained, with the CAC increasing the most, while the Japanese Nikkei bucked the trend. Looking ahead to this week, locally the focus will be on manufacturing and mining production for January, while internationally, inflation for major countries will be released. In the US, inflation is expected to remain steady at 3.1% year-on-year, while core inflation moderates to 3.7% from 3.9%. The CPI print will be crucial to dictating the momentum of interest rate cuts, with the pace being directed by how the growth outlook evolves. Should the soft landing narrative play out, this could very well be supportive for risk assets. We have come to the end of our note. Until next time, do take care from the multi-management team.
Nedgroup Collective Investments is an authorized collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments. See money differently.